Hey guys, Max Convexity here. Hope everyone's having a great day. Hey, I wanted to take a real quick look at the prospectus, or this is probably a proposed prospectus of ULTY together. I know a lot of people have been talking about this forever, and Jay's given several interviews and mentioned this. Anyway, I think they answered some of the questions in this proposal. We'll see what you guys think, though. Doesn't look like this is official. It looks like maybe this was revised in response to some staff questions. It looks like from the SEC. Matt, in one of the discords I'm in, dug this up and posted it, and I appreciated it. It was a good catch, Matt. I'm sure Panda and Retire on Dividends are all over this as well, and are making or have already made a full review of this. I just wanted to look at a few things related to the option strategy. Go watch their reviews for more complete information. Let's get the bad news out of the way first. Expense ratio's 1.24. I mean, and we thought 99 basis points was high, just when it couldn't get higher. Most everything else is similar with the few exceptions. Principal investment strategies. The fund is an actively managed exchange-traded fund that seeks current income while providing direct and/or indirect exposure to share price, i.e., the price returns of selected U.S. listed securities, subject to a limit on potential investment gains. The fund uses both traditional and synthetic covered call strategies that are designed to produce higher income levels when the underlying security experiences more volatility. All right. The fund's advisor, Zega, selects the securities by analyzing, among other things, the levels of implied volatility, measure of the market's expectation of future price fluctuation, of the underlying securities listed option prices. Implied volatility is integral to the fund strategy as it indicates the expected price fluctuations of a security, guiding Zega's selection of suitable underlying securities. Higher implied volatility typically correlates with increased option premiums, aligning with the fund's aim of generating income from its portfolio of covered call strategies. Zega also analyzes significant upcoming events related to, where applicable, the issuers of underlying securities, i.e., earnings releases, as well as trading volumes on such securities and the related option contracts. The fund is generally unconstrained, and therefore underlying securities can be of any market cap and size and industry representation. Zega selects underlying securities based on frequent and quantitative screening process. A frequent and quantitative screening process. Yeah, so it's all quantitative. I love what I'm hearing so far. I love stuff that's automated, systematic. It doesn't sound like there's a lot of judgment in here, and I don't think there needs to be. This is just they're mechanically going out and getting the just capturing as much extrinsic premium as they can. They have the algorithms working on it. So let's see what else I wanted to read you guys here. So basically, they're highly implying we're going to be earnings trades, and they're highly implying it's going to be covered calls. They mentioned covered calls all the time in here. Zega will typically select between 15 and 30 underlying securities on which the fund will implement its covered call strategy. It's going to be covered calls. It's going to be 15 to 30, and I don't think it's only going to be earnings, but I think earnings are going to play a role. Or I don't know. Let me know what you guys think about that. My thought the whole time since I started hearing about this was this going to be for special situations and earnings only. But I don't think that's it. I think this is more like an all-star team of the YieldMax family. And it doesn't even have to be from their family. It could also be something random, but I bet a bunch of them are going to be from their family. That's what I would imagine. So synthetic or shares is the next question, and they've already answered that. They said the fund will likely engage in an active and frequent trading of underlying securities and their options. The frequency at which the fund buys and sells securities will vary depending on market conditions. The fund will conduct regular reviews of its portfolio holdings at least once a month to determine whether one or more of its covered call strategies should be increased, decreased, or eliminated, and whether any such strategies should be implemented on any new underlying security. It is expected that most of the fund's covered call strategies will be held for less than a year. Therefore, gains, if any, are likely to be subject to short-term capital gains tax. Yeah, there's no efficiency in this fund that I've seen so far with regard to taxes because there's no index contracts. They haven't mentioned those. They really haven't even mentioned selling puts. Later on in the prospectus, they do mention selling puts. They can if the situation's right, but I think it's basically a covered call fund. All right, so the fund seeks to generate income from its direct holdings, primarily through traditional covered call strategies. This involves holding a long position in the underlying security and writing a call option on each. The income is derived from premiums received for selling these call options, provided a source of current income, which, while also allowing participation, subject to cap in price and share price gain, if any, of the underlying securities. 15 to 30 securities. This is also giving me FEPI vibes, because this is like, I bet this is going to be an all-star team of a bunch of high yielders in a few special situations. But to have an index of between 15 and 30 covered calls and not to be using index, I prefer the index option strategy that like JEPQ does, where they own the underlying and then sell index calls, because they don't cap the stocks they own, because they own a little bit different than the index. They cap the index. But anyway, I think that's a great way to do it, plus there's tax advantages. But FEPI does it like this. They do it with individual stocks and individual calls on those stocks, and they do a great job. And this is, I think, YieldMax's version of FEPI. Or, well, yeah, YieldMax, Zega, whatever you want to say on it. So the fund's covered call strategy consists of three elements. So a direct long holding of the security or the synthetic, then the covered call itself, and then the treasuries. Just like all of the YieldMax funds, they have three profit centers. But also two of those could be losses as well, as the covered call position and or the direct holding can be and oftentimes are a loss. But the treasuries are always a plus, and one of those two is always a plus as well. They're always 2 out of 3, they should be. All right, so they've left themselves open on having synthetics, but it also says they can own the underlying depending on if it's more cost effective. They mentioned, or somewhere in here I saw something about call skew. If the cost of owning the synthetic, and of course that's affected by skew, and so depending on that, it also depends on whether the shares pay a dividend. They left themselves open to be getting regular dividends from shares. So if they had an Apple position on, for instance, they might consider the fact that they could capture the dividend as well. All right, so let's see if there's anything else that's interesting in here. I really don't think so. Hey, go check out Happy Camper with Dividends. Her name's Corie, and she's in a Discord I'm in, or probably several I'm in, but she is awesome. Her friends call her the spreadsheet queen, and she's gone through and she has all the daily trades on all the YieldMax, which is insane. I looked at those once and got such a headache. I mean, they roll and they scatter their strikes. They might have 3 or 4 different positions open. Sometimes they have too many open or too little. I mean, oh my gosh. I looked at trying to do profit boxes on Tesla once, and I couldn't even figure that out. I could do it, but I just didn't want to mess with all the work. Well, Corey's not afraid of work, and this is a really good site, Happy Camper with Dividends. It's not just about spreadsheets, but I mean, but she knows a lot about these high yield stocks. I would go give her a follow for sure. She's awesome. She's really awesome. In fact, I got a few questions for her, but I know she's been busy, so I haven't hit her up. But oh my gosh, I need help on some of my sheets, as you guys know. All right. Also, check out dollarglitch.com. Oh my God, this is so badass. Also, this is as badass almost as Happy Camper with Dividends. They're both badass. Where's this dollar glitch? Let's check this out. Jax is tearing up something I can hear. Okay, so there, yeah, Jax, you just sit down and be good. Sit down and be good, Jackson. He just does not like being an influencer. Or he doesn't mind it, but okay. So this thing is so incredible. First of all, the UI is incredible. The user interface is incredible, but it's like a scanner, and it shows you investment ideas. And these are like hitting for singles. These show you, like, look at this, selling a 155 put on Apple, what's currently trading at 180. You know, it's 3%. It's a 3% annualized return, but that's a high percentage trade. They show you all these super high percentage trades. Look at this one. So, yeah, cash secured put. So selling a 90 put on AMD that's currently trading at 163. I mean, yeah, it's only 3% annual, but it's almost like free money. Anyway, they have a lot of scanners in here. So they also have deep in the money buy rights, where you buy the stock and then write a deep in the money call, and that's, you know, like a 99% winner also, just like these crazy deep in the money cash secured puts. Great, you know, it's really cool. And then they have a high yield dividend stocks. I haven't really checked that one out yet. I would highly recommend checking this out. But this right here is the same thing that Corey's done. But she's made it into a badass spreadsheet that's all color coded. These guys just put the information into their UI of the thing, so they have the. You know, you still have to know how to interpret it, because it doesn't tell you how many units. You would need to know how many contracts. But anyway, this is pretty good though. You can tell wherever the strike is the same, which there isn't in that one. Wherever the strike is the same should be the synthetic, unless they're both short calls. So that's not. So there goes that. I don't know. I would go check out Corie for this kind of information, because you need a human to sort this out. These are roles and parts of, but still though, this is really good. This is really good. And then you can go down here. I just now saw this, and I guess this is in table form. Wow. Anyway, both of these sites are absolutely wonderful. I really like the cash secured puts. You can go through here and, I mean, get ideas. Sometimes the UI kind of sticks on me, but well, I really like that. So go check that out. Go check that out for sure. All right. So yes, the YieldMax All-Star team. I'm down. I'm all about it. I am all about it. I think this is going to be a winner. I think it's going to compete with FEPI, hopefully, and ISPY, and all the really high-powered ones out there right now. There's a few high-powereds coming up that are going to be really high yielders, and I'm thinking ISPY and FEPI And there's a few others, GPIX, GPIQ. I mean, heck, JEPQ does a great job. He's very consistent and does a great job paying a dividend. All right, guys. You guys have a good one. I will talk to you tomorrow. Later.